Hey everybody, it is Mike Young with Mike Young Real Estate, and I want to do a video here because Florida is in crisis. If you can't tell, I'm in Florida right now. It's not too sunny, but there's tons of traffic. Florida's out of control. Florida's been out of control for the last few years as everyone's been moving in. But what's happened with Florida real estate is what's happening now is what's happened traditionally, which is that they go through periods of booms and busts. And I think we are entering the bust cycle right now. And in my opinion, it may take quite a while to get out of, just as previous boom and bust cycles have. So let me give you a little bit of context. First of all, I'm not licensed here in Florida, but I can help you out. If you need a real estate agent, just reach out to me at my mobile number, 240-205-0417. That's 240-205-0417. I know a ton about real estate. I've been licensed since 2006 as a realtor. Right now I'm licensed in the state of North Carolina, Raleigh, Durham, Chapel Hill areas. Raleigh, Wake Forest, those types of areas. If you need a house buying or selling, specifically I work with sellers, let me know. I can help you out. I have a ton of resources, a ton of social media, a ton of contacts in there, and get your house sold for top dollar, no question about it. That's actually a pretty decent market still, I'd say, the Raleigh area. And Wake Forest, Route 1 corridor over there, doing really well if you ask me, but not Florida. Florida has done amazingly well actually until about, I'd say the peak of the market was let's say April of 2023. Now, why do I say that? Because it seems like all of a sudden the inventory started to pile up. The prices have started to come down. The terms have gotten worse for sellers, and it's turned into what I'd say is now a buyer's market. It was the top of the seller's market in maybe April of 2023. So that was almost 2 years ago, because this is late February of 2025. I'm making this video, so we can reflect back, and I can always tell you, like, when are things really cheap? Well, they're not cheap now. They weren't cheap then. They were outrageously expensive, if you ask me, okay? Now, what was going on? Give me some examples, Mike. Let me give you some examples. I looked at some different transactions that took place, one of which was around this time, April of 2023. Turned out that the house was sold for 10 times the value about 23 years previous, around the year 2000, if you can believe that. It was sold for 10x. And this is the same basic structure of a house, same basic lot, no giant additions or anything, 10x. That's extreme, okay? 10x in 23 years is extreme. And of course, believe it or not, it wasn't in perfect condition, although it did look pretty cool. And folks involved in that transaction did giant amounts of remodeling on top of the 10x payment. So that gives you a hint. That's like a red flag. Hey, we're at the top of the market. We're at the top of the market. What's another idea? Well, another one I know is there's a house that's been on the market for a year now. And guess what? The listing price right now is 50% lower than when they started. 50% lower in 1 year. And guess what? It's still for sale. It hasn't sold yet. Again, another clue. That price came in kind of at the top of the market. Right, it was early 2024. I think these people were hoping, oh, well, the market didn't really peak in April of 2023. We're still going to get this. No, they're not going to get that. And you're not even going to get half of what you want right now. That's bad, okay? It's super bad. Now, what's happened? The inventory's piled up. And what's my basis on looking at all this? I'd say it's the previous bust that happened when prices got ramped up and peaked around 2005, 2006. Now, what happened in Florida in 2005, 2006? There was everyone rushing in thinking we had to buy now, because if we don't buy now, we won't be able to ever afford a house. That was the common thing. I was trying to talk people out. I was a licensed realtor, I think around 2005 or 6. But even so, I was really into real estate. I got in there, knew I was trying to help people, I guess, right? Couldn't even talk people out of doing these deals. A lot of people had deals that went into foreclosure. A lot of people just, I guess they could afford it, but they lost money when they went to sell. They just lost a giant amount of money because they bought at a time when prices were just outrageously inflated. And that's kind of where they are right now. So in 2006, when it peaked, it dropped for a few years. And then by 2008, 9, 10, in southern Florida anyway, 11 was the end of it, the prices were dramatically lower. They had, several $150,000 houses or $200,000 houses were going for $50,000. Okay, that's how dramatically the prices had gone down. And entire houses for $50,000. Some of them were even less than that. I know I was putting offers in on some houses I should have bought them. Could have bought anything around that time frame. 2010, 11, before in 2010, 11 is when the uptick started in southern Florida anyway, but not in the rest of Florida. I'll get to that in a minute. So that's where it starts. It first happens, it's kind of like the cities, right? There's two different Floridas, southern Florida and northern Florida, okay? And it's just like things tend to happen in the center of large urban areas first and then spread out to the suburbs. That's what happens. They start in southern Florida. So we're seeing giant inventory increases in Cape Coral, Fort Myers, and Fort Lauderdale, for instance. I think Fort Lauderdale's almost up to an entire year of inventory right now. Okay, and prices have already started to mitigate. There may be a crash very, very soon. Of course, interest rates are way too high compared to the way they used to be. And unless they get under 5%, in my opinion, it's going to negatively affect the market. It's going to continue to negatively affect the market. Of course, this market was a little bit different in 2006 because it was fueled by near zero interest rates by the Fed, which gave you interest rates that you could get for mortgages between 2 and 3%. And those people are not letting them go. And guess what? I saw a statistic that said 73% of all mortgages held are under 3% right now. You'd have to be a fool to give up a mortgage like that. You'd have to be a fool to give up your residence in any way, even if you have to go into foreclosure and keep your residence. Just keep it. When I say foreclosure, I'm sorry, I mean personal bankruptcy to avoid foreclosure is what I'm talking about. I mean, because those rates aren't coming back anytime soon. Maybe we'll get under 5% eventually, but it's going to be a long time. We're going to have to ride through this downturn, which is starting in Florida, southern Florida specifically. I'm also seeing, as I said, that house, it was also these examples of the 10X purchased house in April 2023 timeframe, and the 1 year 50% price cut in the last year, still unsold. These are southern Florida, okay? That's what's happening right now. So southern Florida is in, I'd say, turmoil. There's no rush to buy, and if you're a seller, it's not a good time to sell. Well, it depends when you bought it. If you bought it in 2009 or 10 in southern Florida, then just sell it anyway. Who cares? But anybody else is going to have to think twice about that, I'd say, at this point. Most people that have bought in the last few years are underwater, and they will be for some time, in my opinion. All right, so in that 2005, 2006 crash in Florida, central and northern Florida didn't recover till 2000. You still could have gotten good deals 2012, 13, 14, even 2015 in the Tampa, Orlando, Ocala areas. I know I got a good deal in 2014 in Ocala area. I mean, they were still there. I mean, houses for way less than $50,000. The whole house, the septic system, the electric, the well, your walls, windows, everything. It was all there. It was just so inexpensive, and it was a no-brainer to move in. And everybody has moved in the last few years. Florida's become a haven for people who want, I think more like personal freedom is a thing, but the thing is when you're enslaved financially, you don't have any personal freedom. That's the thing. And Florida generally pays less than most places, most states. Most equivalent jobs in Florida pay less. Keep this in mind. This is also affecting the market as people wake up and realize what's going on. Another thing is that Florida, back in, after the last crash, 2009, 10, 11, 12, 13, 14, it was like the least expensive state to live in, or one of the least expensive, right down at the bottom. And now the opposite has happened in the last couple of years. Florida is, if not the most expensive state to live in, it is way up there in terms of states, in terms of what it costs to live in a state. Florida's at or near the top. So you see the yin and the yang. You see the cycle, the crashes and the booms. We're exiting the boom right now. A lot of people are in denial, saying it's not going to happen. And that's why I'm making this video, because we run a lot of social media groups. I see a lot of seasoned realtors who even, had their license longer than I have, who are commenting on this too. And, they don't want to freak people out, but there's a lot of uncertainty going on right now. And I'd say just because of the new administration here in the US, there's a lot of uncertainty. I mean, some of it's good, some of it's bad, but it's still uncertainty, and that's not going to be good, I don't think, for this real estate market. And I would say in general, just the feeling of being in Florida. The feeling has been, in my opinion, I've said this, I've expressed this many times to folks over the last few years, that Florida is out of control. It is out of control with the number of people that are in the state, the drivers, the behavior of the drivers, the lack of law enforcement on drivers, okay? I mean, you can just tell it in the way people are acting in terms of, being out of control in general. And that's just more of a, it's kind of reiterating, and it's proving the fact that we're at or near the top and have been for a few years. If that's the kind of general attitude of most folks, is just an out of controlness here. That's got to stop. That's not sustainable. It won't continue to go on. Now, another thing that's kind of another factor that's gone into this, it's not just the inventory higher. It's not just the fact that we're now in a buyer's market, if you can believe that, okay? Prices are still high, but we're in a buyer's market, no longer in a seller's market. Now, why? Let's talk about the taxes, and let's talk about the insurance issue and hurricanes and how that affects Florida in a unique way. All right, now, first of all, property insurance. Some people say it's a scam. Real estate insurance, you have to have it if you have a mortgage. That's the reality. So many people especially new people who are starting out, have to have a mortgage, right? Unless you have a trust fund or someone just writing you hundreds of thousands of dollars checks, which most people don't have. So what can the average Joe and Jane do? Well, they got to get a house. They got to get a mortgage. If they're going to be in Florida, they're going to get paid less on average, and the prices are higher, and the insurance is way higher too, because a lot of people here in Florida are retired and actually don't have a mortgage, so they don't have to buy the insurance. So the people that do really, really need it, and they end up paying through the nose. A lot of insurers don't even insure in the state of Florida because it's a high-risk state because of the hurricanes. The hurricanes are a massively higher risk in Florida than in any other state, and it's an extreme weather pattern for sure. And many people are scared. Many people are scared of the last two hurricanes that have come through the state of Florida. Helene was the most recent one, and Denise and I did a video on Horseshoe Beach. If you want to check that out on digitalnomad.net, just type in digitalnomad.net and type in Horseshoe Beach. You'll see what I'm talking about. It was a nightmare over there, and you can't get out of the way. You have to be high, and that's another issue. A lot of the ground in Florida is low. It used to be a swamp. It was filled in when heavy equipment became available and affordable for people as a technology item. They started to manufacture the state out of swamps and into like higher ground like this. They raised the ground up, and nowadays you can't even do that. There's environmental regulations that won't even allow people to do that, but that's how most of the state of Florida was developed, so keep that in mind. So because of that, it's a dangerous area weather-wise, I'd say, so you pay for that in your insurance. So figure if you have a $500,000 house, you might be lucky to find a policy for $5,000 a year, maybe more like $10,000 a year, and that's your insurance policy. So half that on a $250,000 house, if you're starting out, you're still paying, between $22,550 a year for insurance, or $5,000 a year for insurance. That's just the insurance. Now, what about the property taxes? Well, isn't Florida a cheap place to live, Mike? I mean, because they got no state income tax, right? No state income tax. Well, they make up for it. They always make up for it when you do that. How do they make up for it in Florida? It's by doubling your rate of property tax to what you think you would expect to pay or what you were paying before you moved to Florida. Meaning in most states, it's like 1% of the value of the property is taxed. So if you got a $500,000 house, you're paying $5,000 a year in property tax, which is kind of high. And if you got a it's still a lot of money, right? I mean, $250,000 house, you're paying $2,500 a year. I'm sorry. Still, 1%, $250,000 house, $2,500 doesn't seem that bad. Thing is, in Florida, it's double that. It's 2%. And you pay on the assessed value of the way it's assessed when you buy the house. So there's no breaks up front. The breaks are for long-term residents. So somebody buying a $250,000 house, thinking they're just starting out as a family, Joe and Jane, they're going to pay $5,000 a year in property taxes. And then maybe, another up to $5,000 a year in insurance costs. That's $10,000 a year right there. And they haven't even turned the lights on yet. Pay the electric bill. And I'm hearing, that too. People are saying how the electric companies in Florida are getting approval now for rate increases because they have to, because there were hurricanes and it caused all kinds of damage, even though that's the normal cost of doing business here. But now they want to raise your rates and they're getting approval. And I'm seeing now, people have electric bills this month. And guess what? This is a very mild month here, February, very mild. A lot of times people might say you don't even need climate control. They get $400 or $500 a month electric bills on moderate sized homes. Okay, that's outrageous. I mean, think about all these monies I'm just telling you. You haven't even started paying the principal and interest on your mortgage yet, or anything else that you need. It's become incredibly unaffordable. Now let's talk about the property tax breaks that are available for folks in Florida that, like I said, they're for long-term residents, unless you were able to get in cheap. Because if you get in cheap, the way it works is they assess you on the value of your home through the tax assessor's office on the day that you buy it or the year that you buy it. And that's where you're locked in at, and you have to claim, you have to say, hey, this is my primary residence. If it's your primary residence, you do get a tax break. Like I said, it's more long-term. What it does is it locks you into a low rate of tax. I'd say they cannot increase more than 3% a year. Whatever you were paying, like let's say you were very fortunate and you're a single person, you get a $25,000 exemption, first of all, if it's your primary residence. So let's say you were able to buy, in the last downturn, a $25,000 house that was assessed at $25,000. And you're a single person, and you say, this is my primary residence, I'm filing a declaration of domicile. There's many other things that you can do. Make sure you get a library card, make sure you vote, make sure your doctor's here, et cetera, et cetera, et cetera. There's many tests. It's not a black and white thing. There's about 100 different things you can do. Look them up. Do as many as you can. Say you did all of that. I say, this is my homestead. That's what they call it, a homestead exemption. So that means you get $25,000 off, which means you would have to pay maybe tax on $1 worth of value for your property, which would be next to nothing. 2% of $1, that's 2 cents, right? And then you have to pay your county minimums. A lot of times the counties now, per lot, they have these minimums, okay? It really discourages people to hold land. But what they do is, at the minimum, they'll have like a solid waste fee for the transfer stations that they have where you can take your trash. Even though you don't have trash pickup, you still gotta pay, let's say like $350 a year. So that would be the lowest that anyone would ever pay in the state of Florida for the property tax. Would be like $351 a year. And then if you're locked in at the homestead, this is how it works. It's important that you know this. Then you would never go above a 3% increase every year. You're locked at 3%, can never increase above 3%. And what they'll do is they'll hold back your assessed value from going up by more than 3%. That's how they do that. So if you look at a property and you're gonna go in and say, hey, the assessed value on this property is only $87,000. Why do they have it for sale for $600,000? Why am I gonna pay that? It's because those people probably paid $75,000 for it. Now they're selling it for $300,000, which may be the market value, I don't know. But they're only being taxed on $87,000. So you as a new owner get the welcome wagon from hell, and your new tax value is going to be what you paid, which is $300,000, which is 2%. That's $6,000 a year instead of what the previous owner was paying it. Like, let's say $90,000, that would be $1,800 a year is what their rate was. And now you're paying $6,000 on the same house just because it changed hands and they lost their homestead, which you can't get. You can't get that back. And by the way, married couples get another $25,000, so they give you $50,000 off. But again, if you're buying a $600,000 house, and let's say you're a married couple, you're still down to $550,000 of assessed value. That $50,000 doesn't go very far anymore. It used to be a huge incentive. Like I said, if you bought a house for $25,000, all of a sudden you're not paying any property tax. Your assessed value is like next to nothing, which is amazing. Or your assessed value will still be at $25,000 and then they'll give you that first $25,000 as a credit. They won't tax that first $25,000. That's how it works, I believe. So anyway, that was a long story, and we're gonna let another biker go by here. There he goes. All right, so in the state of Florida, we're having problems. This is the bottom line. I just explained the tax situation. I just explained the insurance situation. I just explained that we passed the seller's market peak almost 2 years ago now, even though some people are in denial. And what's gonna happen if you say, hey, Mike, what's gonna happen with prices? How long should I wait? What should I do? I don't know. But I do know that there are some places around the United States that are so damn affordable right now that actually look kind of attractive. And I'll throw some places out like Youngstown, Ohio. I mean, that place just seems unbelievably inexpensive for what it is. I know it's is because of the steel and the auto industry that just imploded over there. But still, and the climate sucks, actually, unless it's the summertime. If it's the summertime, it's a good climate, I guess. But outside of that, it's no good. So, I mean, I moved down here because I wanted to get sun in the winter. Like, I'm outside. I don't even have a jacket on in late February, okay? And this is not a heat wave. Actually, it's kind of a cold day today. Otherwise, it would be so bright out here with sun, I wouldn't even want to come out here and do a video. So let me know what you think down below in the comments. And by the way, if this looks familiar to anybody, I am in the Villages, Florida. And we're going to put this video here in the Villages, because the Villages is kind of a unique area too, because it's the world's largest planned community, 150,000 plus residents. It is a 55 plus community, although the way it is now, they have so many people over 55 here that anybody can buy a house. The only restrictions are for kids. And they haven't been hit so hard here, although the values have gone down the last year or so. They have, but by a couple of percent. It's not like it's imploded around here, like it probably already has or will, especially in southern Florida. But that ripple will make its way up. That's something I'm saying. Like when I explained how the crash took place before and the recovery took place. Crash happened first in the south, and then recovery happened first. And the crash trickled up here to the north, and the recovery trickled up here. So even if the crash started in 2005 in southern Florida, and the recovery really took hold by 2010-11, the crash didn't start till 2006 or 7 up here, and it going all the way through 2015, okay? I know this is ancient history now, since we're in 2025, but it's important to look at that. And again, the other factor that's different this time is the COVID thing and the zero interest rates that happened, and how 73% of people actually have a mortgage interest rate below 3%. They're not moving unless they're complete fools, is the only way they'd ever give up a mortgage like that, okay? 73% of people that have mortgages have them under 3%. The only time that mortgages are gonna actually start helping the market is gonna be if they get under 5%, and I don't know when that's gonna be. It could be a long time, because they're well above that right now. That's a big problem. That's holding people back. Think about if you're a home seller too. Let's say you could even make a lot of money off your house by selling here in Florida. You're giving up your 2.5% mortgage. You're going to go buy something up north in the less favorable climate that you don't even like the climate, and then you're going to lock in like a 6.5% loan or something like that. It doesn't make any financial sense. These things, it's like are handcuffing people to their homes right now if they have mortgages. If you don't have mortgages, you have a lot more freedom there. And actually, that's the thing about the Villages. I'd say there's probably a significantly higher percentage of homes around here that do not have mortgages. People are just like selling their marital or formal family residence that they had for raising the kids or whatever up north for decades and decades and decades, just taking the money and just plopping it down here. So it's no big deal for people like that. But that's not most of Florida. Florida used to be like a retirement destination. It doesn't seem that attractive anymore, except for the climate. And except for a neighborhood like this. This is actually a really cool neighborhood, if you ask me, the way it's all set up for this. It's like, even though it's not exclusive, it's not technically gated. It's actually mostly public, but there are a lot of private things that you can't access unless you actually own property here in the Villages. So this will be interesting. I want to share this with some of the groups, like I said, that we manage here. We have a Florida Snowbirds group. We have the Villages community information group, and many other groups around Florida. But this, like I said, this video really applies to the state of Florida. Kind of unique. I think they're kind of at the forefront of what may happen to the rest of the country. Unless there's a migration back up north into the Rust Belt. That's what I'm saying. I mean, for so many decades, people were leaving the Rust Belt to the Sun Belt. That's what you always heard. That's what was happening. But now the Rust Belt looks really attractive, if you ask me. It really does, from a what you get for what you pay standpoint. Also, other countries look really attractive compared to the United States. If you don't want to have to go back into the cold, the Great White North, which I do not want to have to do, that's a whole other issue in terms of human health and not getting enough sun. And even today, we're getting some sun, but it would be a lot less if we were in the Great White North right now, of the upper latitudes. So let me know your comments down below. Share this with friends. If there's anything you think maybe I missed on this analysis, let me know. I think I've covered just about everything, from the high inventory to the boom bust cycles, to the insurance issue, to the property tax issue, the property tax breaks and how those work, how they do not benefit new people coming in. It's like the welcome wagon from hell. Think about that. It's a welcome wagon from hell. And if prices are outrageous and there's too many people in the state because everyone rushed in, how attractive does that look to somebody? Think about this. It doesn't look very attractive. That's the thing. So if I had to make a prediction, I would say this is not going to be a quick correction. I would say this is going to be a long-term thing with very high inventory and people even, I'd say sellers removing their homes that are unsold because buyers are refusing to pay what these sellers want. And I do also feel that there's a lot of, the investors are starting to come back to Florida, but they are coming in with lowball offers that many of which are not being accepted, at least not at this point in time, and maybe they will as time goes on. But for right now, I think that this is not a place that investors are seeing attractive unless they're getting steep discounts at which most of the sellers are unwilling to provide right now. Because there's just a lot of denial that goes on right before the bottom falls out. And I think we might be right there, like I said, especially in southern Florida where the bottom is just about to drop out. So let me know your thoughts. Thanks so much for watching. See you in the next video.